I have over an 80% win rate, and all I do is trade fair value gaps and liquidity. Now, I don't trade fair value gaps the way that you and most people trade fair value gaps. Instead of taking short positions from bearish fair value gaps like this, what I actually do is I only look for long positions, and the way I do that is I simply wait for the bearish fair value gaps to turn into inversion fair value gaps. As you can see, we have swept sell side liquidity that was resting here. We also have this bearish fair value gap. Now, as I just said, I wait for the bearish fair value gaps to be disrespected and inversed. So as you can now see, we have a candle close above this bearish fair value gap. Therefore, I will enter into a long position on the candle close above the bearish fair value gap. My stop loss will go if it gets a candle close back below this bearish fair value gap. Then my take profit will simply be this buy side liquidity resting right here. Now, this is a simple strategy that I use that I have over an 80% win rate with, and as you can see, my take profit is smashed. If you are getting wicked out on a lot of your trades, then you should try this stop loss strategy. So this is my 80% day trading win rates model. So as you can see, we have this bearish fair value gap, and we are going to inverse this fair value gap right here. So this would be my entry, and my stop loss would be a candle close below this fair value gap. Now, most ICT traders would just put their stop loss as right here or right here, and they would get wicked out. But if you have your stop loss as a candle close below the fair value gap, not only do you not get wicked out, but you also have a higher win rate if your strategy is good. So for example, if we play at this price action, as you can see, it looks like I've got stopped out there, but actually my stop loss is a candle close below this fair value gap. I do not get stopped out when there is wicks. And then as you can see, we play at the price action, and then the trade ends up hitting my take profit. Try this day trading strategy, and remember, I trade live every single day. If you want to be able to read where price action wants to go most of the time, then all you need to trade is fair value gaps. Now, stop trading fair value gaps wrong. If you trade fair value gaps like you have been taught by only shorting from bearish fair value gaps, yes, you can make money, but you won't find nearly as much probability, whereas if you wait for fair value gaps to be disrespected and use them as inversion fair value gaps. As you can see, we have this bearish fair value gap. Now, don't be interested in taking a short from this bearish fair value gap. Only be interested in longs from bearish fair value gaps, and the way that you do that is you wait for a body of a candle to close above the bearish fair value gap. Now, with this information, we can expect price action to come up and take some sort of buy side liquidity. So what I will do is enter into a long position on the candle close above the bearish fair value gap. My take profit will simply be some sort of buy side liquidity resting above, and then my stop loss will be if we get a candle close back below the fair value gap. And as you can see, this strategy works very well. It has over an 80% win rate. I trade it live every single day. Stop shorting bearish fair value gaps. Instead, try my 80% win rate model that has got me funded multiple times and makes me a lot of money. So as you can see right here, we have swept sell side liquidity, and most ICT traders at this point will be going short off of this bearish fair value gap. But instead, what I'm actually going to do is wait for this fair value gap to be inversed, then I'm going to target buy side liquidity. So as you can see right here, this fair value gap gets inversed. All I mean by that is a candle close above the fair value gap. So my entry point will be right here on the inverse. My stop loss will be if we get a candle close back below the inversion, and then my take profit will be this buy side liquidity. And as you can see, if we play at the price action, I did not actually get stopped out here because my stop loss is if we get a candle close below this fair value gap, not if we wick below it. And as you can see, this trade smashed our take profit. Now, this trading model has an 80% win rate. If you want to get funded in 2024, then use my 80% win rate day trading strategy that has got me funded multiple times already this year. So as you can see right here, we have just swept sell side liquidity. Therefore, we are now going to be looking for long positions. We have this bearish fair value gap here. Now, most ICT traders see a bearish fair value gap and they like to short from it. But what we actually do is wait for this bearish fair value gap to get inversed. Then we look for longs. So as you can see right here, we have this bearish fair value gap that has been inversed. So we then enter into a long position. Our stop loss is if we get a candle close back below this bearish fair value gap. Our take profit is this buy side liquidity. and if we play at the price action, as you'll see, it will hit our take profit. Now, we did not get stopped out here because our stop loss is actually a candle close below this fair value gap. It is not a wick. So yeah, this strategy has an 80% win rate. This is how I use the 5-minute time frame to determine my lower time frame bias. Now, as you can see, we have displaced above this high, so most ICT traders will see this as a market structure shift or a break of structure to the upside and will be looking to go long. We also have this bullish fair value gap. Now, I know so many ICT traders would have gone long from this bullish fair value gap because we have closed above this recent high, which is a market structure shift. But what I actually do is wait for the 5-minute fair value gap to be inversed. Now, if this 5-minute fair value gap is inversed, and what I mean by that is if there is a close below this 5-minute fair value gap, then I will look for short positions. And as you can see, we have now got a candle close below this 5-minute fair value gap. Therefore, I will enter a short position. My stop loss will be a candle close back above this fair value gap, and then my take profit will be this sell side liquidity. Now, this is how I use the 5-minute time frame to determine my lower time frame bias for the day.